Imagine you're building a startup. You've done the work, you've developed your technology, that idea or service that you want to bring to the world. Now is the time. And right as you step out the door to embark on this new path, you're immediately faced with a mountain of existential questions. Should I be seeking early stage investment? If so, where do I find it? Should I join an accelerator? How do I connect with corporate partners for pilot projects? How can I effectively pitch my technology to potential investors and partners? And if you're a CleanTech startup trying to reduce greenhouse gas emissions, that's a lot to consider and plan for, and it can be overwhelming. How do I explore the complex network of the investor ecosystem? How do I navigate the knowledge gap among investors about CleanTech? How do I address the misconception of silver bullet solutions? The vision is clear, but the questions are endless. Every startup encounters unique barriers, but organizations like the Plug and Play Tech Center are there to help. Their network consists of more than 80,000 startups, over 600 world-leading corporations, and hundreds of venture capital firms, universities, and government agencies. Here in the province, Plug and Play is part of the Alberta Scale-Up and Growth Accelerator program that is run by a consortium led by Alberta Innovates. Plug and Play's goal is to drive innovation by connecting the right people. For that startup with 1 million questions, they can be a game changer. Emissions Reduction Alberta partnered with Plug and Play on a study into the non-technical barriers to commercialization of CleanTech startups in our province, to try to figure out what those barriers are and how to overcome them. I'm Craig Werner, Director of Climate Policy and Performance Measurement at ERA, and in this episode of Carbon Copy, we're sitting down with Tarek Al-Nagar, VC Associate at Plug and Play, to discuss when a startup should seek venture capital investment and how to navigate the investor community to get your CleanTech startup rolling. On this episode of Carbon Copy. Morning, Tarek. Thanks so much for joining us on the podcast today. It's great to have you, and I'm looking forward to our conversation today. You and I haven't really had a chance to get to know each other. In fact, I think it's only the second time we've been in conversation. So maybe to help me and our audience gain some insight into who Tarek Al-Nagar is, could you tell us a little bit more about your journey and what's led you to your current role as a Ventures Associate at Plug and Play in Calgary, Alberta?
Yeah, absolutely. Thanks for having me, first of all, Craig. Really appreciate you and ERA for having us out. My name is Tarek. I'm a Ventures Associate here at Plug and Play, working on our sustainability vertical. I'll get more into this later, but Plug and Play is a very active early stage investor and global innovation platform. My day-to-day is spent 90% meeting with founders, sourcing startups for investment, helping source for our corporate programs, and also helping connect startups to corporates for pilot opportunities and POCs, and really helping to de-risk kind of innovation in the Alberta ecosystem. My background's in mechanical engineering by trade. I graduated from Waterloo a couple years ago, spent a year doing consulting in Toronto, and that's what led me to the venture space here in Calgary.
Awesome. Thanks, Tarek. So helping innovators and venture capitalism, is this something that's always interested you?
Yeah, I mean, I think my background has traditionally been from the Middle East. I grew up in very, energy-intensive cities, places like Abu Dhabi, places like Egypt, and I've seen kind of the impacts of what an economy looks like being very closely tied to oil and gas in particular. Obviously, growing up in those places and in Calgary, you see how that impacts not just the economy, but the sentiment of the people. And so I think from a young age, I've always wanted to be in the climate tech space. And so really the role at Plug and Play was perfect for me. A lot of what we do as early stage investors is assessing not just financials, but assessing the impact of a technology, assessing the ability of a team to bring something to scale, And a lot of that takes not just kind of business acumen, but a lot of technical acumen as well. And so a lot of us here from the fund side are engineers by trade. And so I think it's a fantastic way to kind of bridge all that background into, a very meaningful career.
It sounds fantastic. And I think you're right. It's that ability to, have both that business conversation, but also that technical conversation.
A place like Alberta, it really is positioned, I think, to do well when it comes to climate tech. We're seeing a lot of positive signals already. We're seeing a lot of capital flowing in and a lot of interest from not just local investors, but international investors. And that's something that Plug and Play actively is trying to catalyze an ecosystem. And so, there's a reason that we're here. There's a reason that we're not just building up the startup ecosystem and our corporate innovation side, but there's a reason that Alberta is kind of within the focus for the fund as well. So we're certainly optimistic about the next couple of decades here.
That's so encouraging to hear, because I agree. I think there couldn't really be a better time to be contributing to this sort of climate tech space.
Yeah, and it's the last thing I'll say is it's a very optimistic space to be in, I think. We're investing in this space not just because we think there's going to be significant impact from it and significant returns, but we do think that from a venture perspective, we will find venture investable outcomes from the space. And the founders that you engage with day in, day out, they're obviously incredibly smart, incredibly impact-driven. And so, selfishly speaking, it's a great place for, myself to be in, day out, just speaking to these folks that are, very much betting on, finding these incredible solutions to kind of the state that we're in now and just how they're approaching navigating this ecosystem. It's a great place to be, for sure.
I agree completely. So, Tariq, we've touched on a few of those things, but maybe could you tell us or tell our listeners a little bit more about Plug and Play?
Plug and Play was started in the early 2000s, essentially as the result of our CEO's commercial real estate holdings. So his story was he moved to the States from Iran, and his game was commercial real estate before it became tech and early stage investing. He got involved in one particular building in Palo Alto that we now call the Lucky Building. This building, he leased space to startups like Google, Logitech, PayPal, and Danger. And through being their landlord, he got the chance to invest in some of these businesses. And so obviously being, early in the door at PayPal, you do quite well. So building off that momentum, he bought the larger building, which is now our current kind of Plug and Play headquarters. And he continued that ethos of leasing space to startups, angel investing, and eventually hitting more winners. And so fast forward to today, we've skyrocketed in growth. We're in around 60 locations globally. And there's really three main areas to the business. And it's a bit of a flywheel, as I'll kind of speak to in a bit. First and foremost, we're a very active early stage investor. We do north of 200 deals per year typically. These deals are mostly in pre-seed to Series A. And in the sustainability vertical where I work, we've got about a 50-50 split between software and deep tech or hardware startups. So, unlike other VCs, we're not afraid of capital-intensive, physical infrastructure, central businesses, especially in climate tech. And actively, we're looking for startups in quite capital-intensive spaces. Things like carbon capture, we've done lots of deals in, carbon to value, so producing high-value chemicals from captured carbon, EV battery recycling, we're actively looking into mining and mineral traceability. These are just some things that we're actively looking at within our thesis. The second part of the business is our corporate partnerships network. So we've got about 600 corporate partners globally. These are names like Shell, Costco, Nike, kind of across our different verticals. And to these folks, we function as a bit of an external innovation team. So they'll give us their problem areas or technologies they want to explore, and we'll go ahead and source startups for them to partner with for pilot opportunities and POCs. What this does for these teams is it helps them de-risk their engagement with startups, and it's a bit of a more curated approach to your typical innovation team. And the last part of the business is our startup programs. We don't like to call these accelerators, but that's typically where, the kind of category, how the category defines us. These programs are driven by the corporate partners that we engage with. They essentially choose who goes into our batches. And it's not your traditional, 3-month accelerator program where it's, mandatory classes and attendance and, workshops that we, kind of shove down founders' throats. We focus very heavily on producing pilots and POCs coming out of these programs because they're so closely tied to the corporates. They end up being a bit more productive and we bias very heavily on having something, tangible come out of them for the startups. And as part of this, we don't take any fees or equity. We absolutely do look at batch companies for investment, but if we do invest, we're investing at market just as any other investor. And so it's a bit of a different model from your typical early stage accelerator / VC. So to kind of round it all off a bit and to summarize how we position ourselves, we like to kind of summarize all that into our global innovation platform. So we solve corporate problems, and we really lean on all three aspects of the business to, create value for all the stakeholders involved and deliver on that model.
How do you go about supporting CleanTech startups from when you're interacting with them and, learning about some of their specific challenges, things that might relate to skills development, capacity building, any kind of tech guidance or mentorship? How would you describe that sort of interaction with one of your clients?
The plug and play model is really a flywheel. There are three parts of this flywheel that, feed into each other in a very kind of synergistic way. And so I'll maybe start with talking about the investment perspective and, how we engage with startups from that point of view. So as a VC, obviously, we'll provide very early stage capital to, startups that we love in our pipeline. And we're a very, very active early stage investor, like I said. So we'll do about 200 deals across the organization per year. And so for startups in the process of raising, we'll provide introductions to VCs that we've co-invested with. We'll help them secure a lead for their current round. And I think most importantly for the Alberta ecosystem, we'll actively provide them with introductions to corporate partners in our network. These aren't just corporate partners that are local, but kind of across the 60 locations that Plug and Play is in. And this really helps fill out their top of the funnel sales and create early traction for pilots and POCs and things like that. The other way that we can engage is through our accelerator programs. And so we'll similarly work with startups in our programs to give them face time to our corporate partners for more pilot opportunities. And when startups get accepted into the program, they've already been vetted by our corporate partners. So it usually makes for a much more productive program that, ends up in collaboration, and pilots and POCs become a lot more likely. And then the third big way I think that startups engage with us is around something that we call deal flows. So a handful of times per year, each of our corporate partners will come to us with a certain problem space or a technology that they'll want to pilot. And we'll go out and source startups for them to meet with and potentially partner with to kind of solve their problems. And so if we think about the magnitude of that, if we have, 600 or so corporate partners and a handful of times per year, this creates, over 1,000 opportunities for startups to, engage with corporates for their pilots. And we create introductions, I think, on that level of magnitude. And so again, it de-risks for the corporates. It creates top of the funnel sales for the startups. And again, selfishly for us, it ends up being a signal for our investment thesis. We have a finger on the pulse of where corporates are spending their time and money. And so it ends up being a very kind of synergistic flywheel.
In your role as an associate, a VC associate in Plug and Play, what are some of the barriers that you've seen CleanTech startups encounter as they're navigating this journey?
Yeah. So just for context initially on, what our sort of mode is as far as creating these partnerships, Plug and Play has an ecosystem of around 80,000 startups that are in our internal database that we can draw from. So when it comes to producing market reports or finding the best fits for corporates, we have a bit of an advantage given just the volume of folks that we've spoken with. And these aren't folks that are, just scraping from the internet, adding to a database. These are all folks that associates or analysts like myself will go out and qualify before adding to our ecosystem. And so that gives us a bit of a leg up as far as creating those connections off the get-go. As far as the biggest barriers that we're seeing, the sentiment in Alberta and the sentiment that we're hearing from a lot of the startups that are in our ecosystem is there's definitely a bit of a gap in knowledge between the investors, the funders from the public side, and the startups as well. And this certainly causes a lot of strain for the startups that we work with. So something that we always say at Plug and Play, and something that we understand as an early stage VC in climate tech is at the earlier stages, there's not always a direct line between TRL valuations and round sizes, between kind of pre-seed to Series A where we tend to operate. We've seen startups raise, fantastic Series A rounds at really healthy valuations, but low TRLs. I think it's a bit of a nuance that a lot of investors in the ecosystem don't tend to grasp. It's a bit difficult for them to, navigate these early stage deals. I think there's certainly things that need to be true for a startup to, reach a healthy Series B. But it's important for VCs to understand that early on for these capital-intensive businesses, it can take a very long time and lots of capital, to really reach that point of scale. But they do have the ability to scale, and there is the potential for venture-level returns. And then another one that I think you guys highlighted on in your report is there's a big culture of risk aversion and fear of failure, even in the kind of early stage investing landscape in Alberta. So almost every single startup that we see come into us is looking for introductions to US-based VCs. And I think there's a couple of reasons for this. Obviously there's just a lot more capital ready to deploy in the States, but there's also the sentiment that Canadian VCs are much more risk averse than our US counterparts, even at the very early stages that we tend to operate. And then, the last thing I'll say in regards to sustainability is a lot of the folks that engage with us at the corporate level are looking for the one kind of silver bullet in the space. They'll only invest or engage with a startup if it's the be-all, end-all, it meets all of their targets from a sustainability and economic perspective. And what we always say is we'll need several silver bullets in the space, and the progress that we'll see will always come step by step. I think that early stage investors, need to keep that top of mind and not neglect the kind of step by step progress that we're seeing in service of searching for the one silver bullet, which we won't find ultimately.
Great insights, Tarek. Thanks for that. I think for some of our listeners, they may not be familiar with what that process of going out and getting seed funding, etc. You talk about things like Series A and Series B. Could you maybe take a moment and walk through what that process sort of looks like? What does an investor, what does an innovator need to go through to get some of that funding?
Yeah, absolutely. So the first thing I'll say is a lot of the startups that I meet with early on, I like to tell them that VC funding is, not a measure for success. It's a product and a means to an end. Oftentimes, early stage founders, especially in less mature ecosystems, will kind of confuse VC funding with, positive traction and success, where ultimately it's a product that founders can leverage to achieve scale, right? So the very first thing to think about is, as a founder in the climate tech space, do I need venture funding? Is this something that will actually add value to my roadmap? Will it help me achieve scale? How can I leverage a combination of public grant funding and private market funding to achieve what I need to? So the first thing is I'd be very thoughtful about engaging with VCs and raising a round from the private markets. And then fundraising is all about narratives, really. So when you're engaging with VCs, a lot of things that I find, a lot of the times in Alberta, I find that startups will, maybe engage before they're ready necessarily, or they won't be as intentional as they need to be once they start formalizing around. And so what I'd say to founders is, engage with founders who have raised rounds in the past, engage with VCs earlier on, and just build relationships before it comes time to raise money. And for players like Plug and Play who are in the ecosystem and have a vested interest in seeing it grow and mature, talk to them very candidly about what it takes to raise a round successfully, what positive signals look like, what to avoid. Because with venture financing, momentum is extremely important and traction is extremely important. And the narratives that you tell investors will ultimately inform whether or not your round is successful. And so I think coming into the process a lot more informed and engaging with investors on a more casual level and building relationships with them before it comes time to raise a round, that's what ultimately leads to success.
So it sounds like your advice is don't wait. Start to have those conversations and build those relationships.
Yeah, absolutely. And I think we encourage a lot of the founders in our ecosystems to seek funding from private markets before they think they're necessarily ready, as long as they're thoughtful about approaching that process. Reason being, especially in climate tech, there's a bit of a tendency to rely very heavily on public grants. And as a VC, if we see a startup coming in with round after round after round of public funding after public funding, it tends to kind of sour the process for us later on. So earlier on, it's important absolutely to leverage a combination of kind of public grants and private market funding. But it is really important to get those signals from investors as early as possible as a startup. And this could be in the form of VC funding. It could be in the form of private grants from places like Breakthrough Energy. And so there's lots of ways to give those positive signals to VCs. But it's important for founders to understand, what that balance looks like before they engage in the fundraising process.
Do you think that was a unique perspective that Plug and Play brought into the barriers to commercialization study?
I think so. I mean, Plug and Play's perspective is really a hybrid. It comes from three different parts of the ecosystem. Our perspective as an investor, our perspective from the startups that we engage with, and the perspective of the corporates that we work with. And so, like I said before, we get signals from each corner of that triangle to, inform our investment thesis. We'll use it to inform how we engage with corporates in the future and also how we help startups kind of achieve that scale ultimately. And I think one important thing to understand about Plug and Play is our success as an organization is multidimensional. So pure early stage VCs will typically have like a 5 to 7 year timeline to really understand how their funds performed. But for us, I think we have several different ways that we look at to give us an indication of where an ecosystem is at and how we're contributing to it personally. The performance of our portfolio is absolutely one of those signals, but another big measure of success for us are the startups that we're working with entering into pilots. In that same vein, are we helping corporates really de-risk their engagement, and do they feel more comfortable entering into agreements with startups? And these aren't things that we directly profit off of, but we absolutely benefit from having this understanding of what's working in the ecosystem. And so I think whenever we engage in reports like this and whenever we engage in an ecosystem, we approach it from that three-pronged approach. And again, it's very much a flywheel where success in one of these areas will mean success in another. And ultimately, it ends up being quite synergistic, I think.
Yeah, that's a great point. I like that in terms of not needing to be successful all the time and everything, but it's really a case of being successful at one of those points in time and then continuing to build off of that good foundation. Now that we've published this report, maybe you can tell us a little bit about what you find interesting about the findings around the investment ecosystem specifically. Was there anything that stood out for you?
Yeah, I think first and foremost, probably the most prevalent finding as far as a barrier goes from an investment perspective, like I kind of touched on before, is the investors and funders knowledge gap. And so this is something that we're seeing from not just the investment perspective, but startups and public funders as well, I think, kind of fall into this trap. And again, it causes a lot of strain for VCs and startups in the ecosystem. I touched on this a bit earlier, but I'll strain it again. I think it's really important for early stage investors to understand that at the pre-seed to Series A stages in these very capital intensive businesses, there's not always a clear correlation between TRL valuations and round sizes. We've seen examples of very strong Series A rounds raised with low TRLs. I think it's important for the ecosystem to learn how to navigate those things. I think the other thing that's, I think, quite prevalent for Alberta is the culture of risk aversion and fear of failure. I think one thing that corporates look to de-risk their engagement with startups is looking for the one silver bullet. Like I said before, they won't engage unless a startup will kind of tick all their boxes as far as sustainability targets go and also their economic targets. And then another really important thing that a lot of my conversations with startups tend to touch on is the grant process. You guys mentioned that it's very lengthy, it's very constraining. And so we tend to advise startups to, not rely too heavily on public grants because it can be, a bit of a negative signal when you try to raise from VCs or the private market later on. And, as far as the process goes, we never want a lengthy process to be the enemy of progress and ultimately getting funding. It's important for startups to, have public grants as one of those sources, but we always tell them to balance that with a combination of private market funding to ensure that when it comes time to raise from VCs in the future, you set yourself up for success. You navigate the fundraising process, you're sending those positive signals out, and you don't rely too heavily on these, very constraining, very one-size-fits-all kind of grant applications.
Do you have a sense of why there's this knowledge gap persists?
I think there's quite a prevalent culture in Alberta of being a very fast follower, but never a first adopter in the ecosystem. I think that comes from a few things. You guys touch on it a bit in your report, where sustainability benefits are kind of underscored from the corporate's perspective. We think that's kind of one of the more dangerous and important barriers that we'll need to address. But I think as far as the Canadian ecosystem goes, there does need to be some element of letting it mature, having players like Plug and Play come in and operate for long enough to kind of catalyze the ecosystem. There has to be an influx of capital. I think we have to address the culture of risk aversion, especially at the early stages. Like I said earlier, whenever startups engage with us, one of their big asks is introductions to US investors, just because they're so much more willing to take on that risk. They're much more comfortable with it. I think they have a better understanding of what investing looks like at these early stages. So I think, to address this, we need, I think, to de-risk startups engaging with corporates through organizations like ERA and Plug and Play, really increasing collaboration between organizations like this. And what I mean by that is, sharing startups between either ecosystem. When it comes time for a startup that's raised project financing to eventually, raise equity financing, having them referred to us, for example, and, vice versa. And through things like that, through de-risking the startup's journey and the corporate journey of engaging with the startups, I think naturally there'll be an influx of capital. The natural benefits of engaging in a sustainable way will show themselves. And ultimately, the ecosystem needs more time, I think, to mature and develop.
I was kind of going to get there. Is you got ahead of me, which is, how do we bridge some of this? How do we start to address some of these barriers and find solutions?
Between ERA and Plug and Play, I'd say that both of our organizations come in at what we like to call the 1 to 10 phase for startups. So when we think about startups, especially in climate tech, we think of the lab setting, founders really developing their core technology as them moving from 0 to 1. When it comes time to go from 1 to 10, organizations like Plug and Play can come in to make introductions to corporates in our network, help fill out these initial pilots and traction. We help fill out their early rounds with interest to other investors, and we ultimately work to enable what will become scale, right? I think ERA also fits in a similar stage for startups in the context of project financing. And so, the first thing that comes to mind as far as bolstering the ecosystem is, I think we have to share startups between either ecosystem, kind of knowing where each organization sits and how they can add value, and then being much more collaborative and referring startups to each other kind of as they navigate that fundraising process. I mean, we're always looking for venture investable companies that might have gotten non-dilutive financing and help from like a project financing perspective. When it comes time for them to raise a round, we absolutely want to hear from them. And then similarly, startups that we're seeing come through our doors from the program and from an investment perspective, having them access non-dilutive capital, I think, is also extremely important in combination with fundraising from VCs. And so I think, at the bare minimum, having a lower barrier to share startups between one another is kind of step one as far as creating that ecosystem. But I absolutely think that that's step one as far as, putting us on the path to maturing the ecosystem in Alberta.
Yeah, great points, Tarek. And, that's that space that ERA plays in is it's non-dilutive funds for proponents. Obviously, that's very attractive for a lot of innovators looking to find funding. But to your point is, startups and innovators being mindful of ensuring they can at least strike a balance in terms of where they're getting their funding from and how they can advance their projects so that they can obviously remain attractive and appealing to VCs looking to, like plug and play, looking to match make, I think, with some corporate challenges. Was there anything that surprised you in the study?
I don't think anything was overly surprising. We know that the space has very capital-intensive projects. We know that validating and navigating these projects is challenging because of that. I think the one thing that I'd challenge as part of those top barriers is around those first-of-a-kind projects that ERA touched on. And so at Plug and Play, we don't really buy into the sentiment of first-of-a-kind. The partner of the fund here in sustainability has said before that if you think that something is first-of-a-kind, you just haven't done enough due diligence. I think we're always going to find parallels between technologies that have existed before that are slightly changed. You can always trace ideas to different things in the past. And VCs and early stage investors should always look at those parallel technologies that have done well, and ultimately those trajectories will be mirrored, I think, when it comes time to evaluating what we think is first of a kind today.
Earlier on, you talked a little bit about, Plug and Play not being averse to investing in not only the ideas, proof of concepts, but these large capital projects too. I wouldn't mind exploring that a little bit. There's obviously risk associated with that when you're looking to really make big capital investments. Why is that from Plug and Play's perspective, you embrace that, and that's not something that you sort of steer away from?
Yeah, I mean, put very simply, it's the core of our thesis, really, when it comes to climate tech. We know that climate tech is a physical problem. It's going to need physical solutions. I think, quite frankly, also, a lot of our best performers in the portfolio have been hard tech and deep tech startups. And so it's an area that we're looking to kind of double down into. These are areas like carbon capture, mineral traceability, like I've said before, EV battery recycling, things like that. And so what it comes down to is we know that these things will have to be a part of the solution when it comes to climate tech. I think the thing that has prevented VCs from really embracing the space in the past is the long timelines, the capital intensity, and the uncertainty that it'll provide venture investable outcomes. But what we're seeing already is some of the earlier projects that we've invested into in the States have achieved scale. They are well on their way to achieving kind of venture level outcomes. And so we look at these indications in our portfolio and we look to double down in similar technologies that will demonstrate that scale. And so what it comes down to is it's gonna have to be part of the solution, deep tech and hardware. And I think, being averse to it, you're kind of avoiding the crux of climate tech.
Yeah, great points. And I think you talked a little bit about a sort of sense of or a sentiment of risk aversion. It strikes me that perhaps a VC organization like Plug and Play demonstrating a willingness to take on some of that risk and sort of leading in that space. It's probably one of the key tools to helping to address that particular challenge of risk aversion. It's probably an indicator that others can look at as, well, maybe we need to be doing, being a little bit more, brave in terms of taking on some of those risks. Would you say that's a little bit of the ethos?
Yeah, absolutely. And, what we're looking to do in Alberta in particular, we've been in Alberta for just over 2 years now. We want to take all the learnings and the results from our investments and our programs in the States and really bring them up north, right? So this sentiment of, bypassing risk aversion, investing in deep tech and, associating deep tech with venture as well, I think is really important. The next step for us, I think, in our journey in Canada is making these investments north of the border. and having that same culture, being a catalyst to it for the Canadian ecosystem as well as the US ecosystem. I think that will come ultimately with, showing the results that we've seen in the States and going through the same kind of trajectory that we have, building the same relationships with, labs around the country, finding the best founders to back. Ultimately it will happen. It just needs time. And, it's been just over 2 years for us, but we're actively looking to, invest more in Canada and, replicate the same outcomes essentially in the climate tech space.
Well, some of the themes you touched on, things like carbon capture, a number of these are strategic priorities for Alberta. And so I think it's certainly beneficial for our ecosystem to have, players like Plug and Play bringing some of the skills and expertise that they've been able to hone in other jurisdictions and bring some of that to Alberta to try and really advance some of the technologies, because we really do have quite a robust and thriving innovation ecosystem. There's always ways that it can be improved, but I think having players such as yourself invested here and helping some of these startups, can only be beneficial.
Industrial scale carbon capture. North America's first hydrogen-powered locomotives. Using drones for reforestation. Since 2009, Emissions Reduction Alberta has been helping to deliver on the province's environmental and economic goals by investing in projects just like these. Projects that pilot, demonstrate, and deploy clean technologies across our industries. Whether it's detecting methane from space, producing biogas from Alberta's agriculture industry, or one of almost 300 other projects in our portfolio, ERA's investments in these game-changing technologies are reducing emissions, lowering costs, attracting investment, and creating jobs right here in Alberta. ERA's funding is sourced from the Government of Alberta through the Technology Innovation and Emissions Reduction, or TIER, Fund, which is Alberta's provincial industrial carbon price. For more information about Emissions Reduction Alberta, visit eralberta.ca.
You've clearly identified certain barriers as an organization, barriers within the ecosystem, things that you want to overcome. Looking to the future, what do you think, how do you think from your perspective Plug and Play might look to overcome some of the significant barriers you've observed? And from your perspective, how does the ecosystem need to change to better support clean tech startup?
Yeah, I think ultimately the success criteria for us is doing more very high quality deals in Alberta. And to do that, I think we need to help bolster the startups in our ecosystem to, get to that level. Now, one part of this equation, I think, is just time in the ecosystem, letting it mature, giving us time to create and foster those relationships between startups and investors and, other funders in the ecosystem. And then at the same time, having the startups that we work with really achieve scale. And then another big part is just, I think, increasing our surface area in the ecosystem, making more introductions to investors, continuing to help startups fill out their top of the funnel sales with introductions to corporates, and not just locally in Alberta or Canada, but corporates globally. I think if we continue doing that, to do that in combination with collaborating with organizations like ERA and helping organizations de-risk their engagement with startups more effectively, I think ultimately that's how we and the ecosystem create the ecosystem that Alberta can fulfill up to. From our perspective as investors, the best deals and the best founders come to you through relationships with great founders you've met in the past, great investors that you work with today. And so increasing the surface area, again, of interaction between great folks in the ecosystem, I think, is the only way to bolster the ecosystem. And there's also, some dimensionality to that, where as a founder, you need to be creating relationships with not just VCs, but other founders, accelerators wherever there's value, labs, public funders, and things like that. And relationship building, I think, is what ultimately will lead to success in fundraising, filling out your round, and ultimately, achieving scale when it comes to, climate tech in particular.
I suppose the takeaway there is having a good idea and having a good technology is incredibly important. But it's not enough. It's then taking that and being able to market it and have, I think you mentioned this earlier, it's about narratives, really being able to articulate that narrative to a diverse audience across this innovation space. And that's not necessarily something that every startup is focusing on as they're looking to get their technologies off the ground.
Yeah, absolutely. I think that way you also reduce your reliance on timing when it comes to achieving scale or, filling out your round. When you build relationships consistently with high quality folks in the ecosystem in the long run, you reduce the impact of timing, I think, on what will ultimately lead to your success down the line, right? And so for, I think, Alberta to create the ecosystem that it needs to in the future, there needs to be more enablers and more connective tissue like that bridge the gap between organizations and corporates and startups and just lower the barrier for engagement between all these folks.
If you were to give advice to an innovator or startup in terms of how do you approach this journey, what are some of those key things that you think an innovator or a startup needs to keep in mind as they're working towards their commercialization?
So the first thing I'll say is, as a founder, understand if and when you need venture financing, what venture financing means, what it unlocks, and engage investors earlier than you think you might need to. Before it comes time to raise a round, getting to know the folks in your ecosystem that have startups like yours within their thesis, I think, is really important, and having them keep you top of mind is key. When it comes to fundraising as well, finding the balance between public grants and private market funding, ensuring that you're not relying too heavily on one versus the other, you're leveraging non-dilutive funding when it makes sense, and you're using your private market funding to send positive signals to the market for future rounds, and you're also using it to unlock more non-dilutive funding in the future. I'd also say to founders, speak to other founders who have raised in the past and really focus on developing your narrative once you start fundraising. Because again, that tends to be the most important thing as you go about raising a round. And focus primarily on developing early traction with corporates in your pipeline, because that'll make engaging with investors significantly easier once you have pilots, paid pilots, and other early measures of success that you can point to. And then secondary to that, engage with accelerators, engage with strategic investors that will be a value add. Be very selective, I think, about who you engage and who you ultimately add to your cap table, and make sure that there's synergies between you. You're adding value to each other, because when you ultimately enter into a relationship with a VC, it's a bit like a marriage, and it's a relationship that'll last decades and decades until some sort of an exit or something of similar nature. And so be very selective about who you engage with, and make sure that you're able to work with this team and this fund for the long term.
Tariq, that really sounds like great advice. Thank you. I'm sure our listeners and those that are innovators and startups that are on this journey will appreciate that. And it really sounds like being very deliberate about how you interact, being invested in the conversations, being present. That is a significant investment of time, but it's really good advice for those looking to navigate this. Now, Tariq, I think we're getting close to the end of our time here today. Thanks so much for joining us. Is there anything else that you maybe want to leave either investors or innovators and startups with, a perspective of Alberta's innovation ecosystem?
Honestly, I'll just say that we're very optimistic about Alberta for the future. Like I said before, there's a reason that we've set up shop here, the reason that Alberta is within our investment thesis. I'd encourage any founders, investors to reach out to Plug and Play, reach out to myself, anybody on the team. Whether or not you're raising a round, if you'd like to chat about what it means to fundraise from a VC, if you'd like introductions to our corporate partners, or if any investors are interested in collaborating with Plug and Play moving into the future, that's what we do. That's our ethos. So we've been in Alberta for just over 2 years now. So we're starting to develop the reputation that I think we'll continue to do in the future. But we're always looking to connect with folks and, just increase our presence here in the province.
And what's the best way for people to get in touch?
Reaching out to me on LinkedIn, I think is the best way. Reaching out to anybody else on the Plug and Play team, we're very responsive. We'll likely reach out to you for, speaking engagements or other ways to come out to our events in the future. We're always doing something or the other in the city or in a city near you, wherever you are. And so just reaching out to anybody on the team through LinkedIn, I think, is the best way to get involved with Plug and Play.
Tarek, it's been fantastic having you today. Thank you for the conversation. Thanks for your really valuable insights and perspectives. I'm sure they're going to be appreciated by our listeners. Thanks for taking the time for joining us on Carbon Copy.
Thanks so much, Craig. Appreciate it.